Good morning, traders. It is Tuesday, August 19th. Today, there's not a whole lot changing in the markets. As we see from the 30-minute chart, we had a nice pop. We've got a nice bull flag. We had a little bit of panic in there. So the market is trying to reset. Maybe it wants to shake things out a little bit lower before going higher. But overall, it looks like a bull flag pattern. If we zoom into the shorter term or the daily chart, we have a pop, a pause. We have a series of kind of moves or pauses. A rally, pause, rally, pause, rally, a little bit of a correction here, a little bit of a reset, and then it popped and paused. It's popped again, it's paused. So we are expecting higher pricing. Now, I'm going to cover a few questions from members because there's not a whole lot of exciting stuff going on at the moment. So one of the questions was talking about global markets. Some people talking about the global markets are kind of breaking out. They think the market's going to run a whole lot higher, which is possible. This VXUS is the one the members share. This is the total international stock market. Now I'm going to go out to the monthly chart. And as you can see, there's no doubt it has been channeling to the upside. As far back as this ETF goes, it is working its way up. It's no doubt into nosebleed territory, kind of at a reaction high. So that is, to me, is a little bit of a warning sign. Again, people are getting really, really bullish and thinking the markets are going to take off and start a new super bull market, which to me is a contrarian indicator, as you know. It's possible, it could happen. And when our charts and all of our tools tell us that and say, hey, we're back in a full-on bull market and there's no turning around, then our strategy will change a little bit to be more aggressive. But at this point, it's still in this territory where it is high risk, stage 3, based on our core analysis, which is kind of around the RSP, IWM, and IWC, which I talked about in yesterday's video. But overall, again, the market here going to the upside. Keep in mind, international stocks, and we talk about this in our mentoring sessions. It doesn't matter if it's the German DAX, or, whichever index it is around the world, they all move very, very similar. They usually, when the US is in a bull market, the rest of the countries are, exchanges are also in a bull market. When they're in a bear market in the US, they usually pull back. Now, some may continue to go higher for a few months longer before topping out, or some might continue to fall for a couple months longer before they bottom. And they're not always the exact same timing, but generally the rising and falling tide from a high level view, they're all the same. They're stocks. People are either bullish for stocks and risk or they're not around the world. And keep in mind, most of these indices are very tech heavy. Ford, it's a terrible example, but Amazon, we've got NVIDIA. All these big mega caps are listed on all the other exchanges, and they're also driving those, right? So don't think it's like a totally different batch of stocks that are on fire. It's the same stocks on multiple exchanges driving them up and down. So that is one thing I think a lot of people don't realize. International stocks and indices and things like that, they still have most of the same companies. All these big companies are listed on all the exchanges, and they're driving all of those pricing. So next question here, somebody want to touch on IBIT real quick. We did get into IBIT. It hit our target. Let me just go back to the daily chart. It was a very short-lived trade. It rallied up, hit our target. And then we ended up exiting out as it started to roll over and move down. So we're out of that, and we're not interested in Bitcoin at this point. I'm not a fan of the price action. Another one was somebody talked about how, I think it's on the S&P 500, talking about how the candle close, let me clear this up a bit, is generally the same distance from the 25-day EMA, which is this pink line. Now, I use the 20-day EMA. Maybe he meant 20, and he just typed in 25. But if we zoom out here, I think what he's talking about in a nutshell is we've got the pink line running up. We have price on average running up. They tend to be kind of the same distance. And he's wondering if there can be a trading strategy based around that. It's possible. You just have to figure out if it works in the long run and how you'd manage those positions. But yeah, it does seem to carry on average somewhat of the same distance from the 20-day. Usually if something gets overextended, like where you have priced this distance here. When it gets that far, the market, goes into a correction. So you can kind of test that again. If it gets that far, which it hasn't at this point, usually the market gets, if it gets too high above the 20-day, it's usually a little bit overdone and it needs some reset to come back. But I don't get a whole lot of insight. I have looked into that years and years ago. I don't think it's an ideal strategy, but it's possible. Anything is possible if you put enough time and effort into figuring out a way to make it work. Now, another question was somebody wanted to talk about the 6 to 12 month outlook on currencies and the British pound. So really high level, I am not a currency really expert, but let's just take a look at the pound. This is the monthly chart going back all the way to 1996. Obviously, it has sold off, it paused, sold off, it paused. You could say it's maybe still in a pause, or maybe it's sold off and is reacting high, but overall it is kind of near resistance and struggling. If we take a look at the, this is the currency play, the the pound and the US dollar, because this person is deciding whether to move to the US dollar as a play or stay in the pound, or one of those scenarios anyway. But if we take a look at the price action, we have price making a series of higher highs, higher lows, and now it's broken down and now it's reacting high. And if we take a look at just price action, which is in my book, which is, where is that? Over here, here we go. You have price coming up, and then eventually you have one that breaks a set of lows, breaks down, and then it has a reaction high. So it goes up to a topping phase to a downward phase. And if we take a look at the price action, where was that? Right here, we have, obviously I can't draw on this chart, but we've got this series of higher highs, and then we had this set of lows. It broke down through there. Now it's reacting high. So now it's going to make a series of lower highs, lower lows from the looks of it, meaning the pound, I think, could go down. Which coincides with just the currency itself. Overall, it's in a downtrend and at resistance, and it just got rejected pretty good on this monthly chart, which we can see however you zoom in on this thing here. Other than that, let's just take a look at the rest of the markets real quick. We've got equities are a little bit mixed. The Dow is up and the rest of the indices are slightly down. We have the dollar slightly down. Gold and silver are slightly positive. Oil is actually picking up a little bit of speed here to the downside. It's down 1.3%. And based on this pattern we talked about yesterday, where we've got the drop, we've got the rebound up, it's come down to the 618. It's got a pause, which means we should go and see it drip down, kind of go into a waterfall sell-off, potentially down to around 56, which is what we've been talking about for months, really. This news-driven move is to be ignored and negated. A lot of people got sucked in, chewed up, and spit out, who chased that thinking oil was going to go to the moon. I can't believe how many people thought we were going to $100, $150 oil over here. It was unbelievable how sensitive and quickly people changed their minds on what's going on. I mean, there was potentially a catastrophe with more bombs going off and stuff. Anything is possible, but news-driven moves, if you just get the news out of it, you'll see how they're very short-lived. They carry a lot of risk, and then the market will go back into its normal trends and bias afterwards. All right, just going to touch on gold and silver real quick because everybody keeps asking about it. But guys, keep in mind, gold has been sideways for months. It's not going anywhere at the moment. It's trying to figure out what it's doing. And it really is barely putting in any moves. I know some of you keep saying, cover gold more, cover gold more. And there's only so much you can cover something when it's not really moving. It had a pop up. We talked about all of this as it's unfolding, and now it is just fading down, trying to figure out what to do. Nothing has changed in my outlook. This is a big bull flag pattern. It is pointing to higher pricing. And I'm personally not looking to get into gold as a trade until I start to see it actually break out and start to run. And then I want to maybe do a discretionary, a bonus, kind of a side trade. That could last a month or two. But overall, I think so many of you are overthinking the precious metal space. You want an update like twice a day on it, but it's just going sideways, trying to figure out when it's going to pop and break it. If it's going to pop and break. Silver is the same thing, just a noisier chart. It has been more or less up and to the right. It's consolidating. It's building what looks to be a little bit of a bull flag. And when gold pops and breaks, we should see silver pop and break. Other than that, nothing significant is really happening in this space. It's been like this for months, especially gold. If we look at the gold miners, they are pushing and kind of correcting to the upside. It's a little bit of a running correction, which I'm never a huge fan of. But the fact that the precious metals, the physical metals, are really bullish, this could have a nice blow-off move, which is what this pattern is kind of known for. It can shoot higher and have a big run for 4 or 5 days, but then it can also crash right back down. So it's one of those plays that if it does, here's a perfect scenario right here. Here's one here. It runs up. It has a running correction, means it's just chopping and trying to shake people out as it goes up. And then boom, it can pop and have a big move, and then it can come right back down and be at that same price for a long time. So we've got the pop, we've got this running correction. It is trying to shake out traders with the gaps, the highs and lows here. It could very easily pop and have that nice move. And gold miners, silver miners, let's take a look at silver miners. If we take a look at silver miners, they're a little bit more of a bullish pattern in terms of a bull flag pattern. It's believe it or not, I'm not saying believe I'm saying this. It's a little more stable. It's popped up. It's kind of trading sideways. It might have a little bit of a pullback and a little ABC correction that cleanses the market. Now, an ABC correction, if I just zoom back on here, I'm trying to see if I can find a pattern. Can't quite seem to find one on the short-term chart, but an ABC correction is when you've had a nice move up, you have a move down, so an A, that's one move, and then you have a B, it bounces up, or you could, it's hard on this, but more or less it bounces up, and then what you need to do is break this low over here. So it goes A, B, and then C. And when you break this low, there's be a whole bunch of people that'll put in a stop. We usually see a volume spike. It shakes the market out, and then boom, it wants to shoot higher and take off. So that's kind of, that silver is very noisy. It does all of this kind of stuff all the time. Wouldn't be surprised if that happens, but overall, the precious metal space is primed and ready for a pop. Anyways, that's it for now. Talk to you soon. Bye-bye.